Foreign investors pulled 63,450 crore out of the market in first half of June. That brings the relentless 2026 sell-off to 2,88,382 crores. We have been analyzing this data since March and it helps in identifying and understanding the sectoral rotation by the big boys. In today's video, we are analyzing FPI activity for first half of June 2026, mapping out exactly which sectors they dumped, where they parked their cash, and what it means for the market going ahead. Before going ahead, our analytics show more than 90% of our regular viewers aren't subscribed yet. Hit that button now to subscribe and support Market Insights by Prakash. Now let us break it down sector by sector. First, the sectors they exited. 1. Financial services. Foreign investors are treating heavily owned Indian financial as their fastest, most liquid cash exit. The 2026 damage has already topped a massive 1.26 lakh crores, but the selling panic is finally slowing down, dropping from 60,000 crore pulled out in March to just 11,263 crores in June. 2. Oil, gas and consumable fuels. FPIs are dumping oil and gas equities at a brutal accelerating pace. Total outflows hit a massive 25,857 crores for CY 2026. The clear trigger, surging crude oil prices fueled by the West Asia crisis. 3. The selling pressure over the first half of June for auto sector has increased. FIIs have sold a massive 9,044 crores in this period. Total outflow for CY 2026 reaches 29,561 crores. 4. The persistent 33,514 crore FII outflow from the Indian IT sector in CY 2026 is driven by 5 core factors: generative AI disruption, capital rotation, US trade and visa headwinds, macroeconomic pressures, and valuation correction. 5. FMCG. Foreign money is aggressively fleeing the FMCG sector, with total offloading for CY 2026 hitting a heavy 26,696 crores. Surging crude and energy costs are driving relentless inflation, directly crushing the everyday consumer's purchasing power. 6. Metals and mining sector saw profit booking of Rs 4,722 crores in this period. For the CY 2026, total inflow still stays strong at 17,192 crores, and it's the second best favorite of FIIs for CY 2026. 7. Huge profit booking is seen in healthcare sector, driven by a broad global risk of flight from premium Indian valuations. Total outflow for CY 2026 stands at 22,373 crores. 8. A minor profit booking of 2,586 crores was seen in the first half of June for capital goods sector. Driven by government capex push and robust demand in energy, defense and railways, India's capital goods sector secured 22,596 crores in FII inflows for CY 2026. This sector continues to remain the favorite for FIIs in CY 2026. 9. Driven by India's skyrocketing peak electricity demand and a massive structural shift towards renewable energy, grid modernization and battery storage, power sector is the third sector that has shown positive inflow for CY 2026 with overall inflow of 4,708 crores. 10. Construction materials. Selling in this sector continues by FIIs and they have offloaded 2,426 crores for first half of June. Total outflow by FIIs for CY 2026 reaches 9,018 crores. On the flip side, there was only one sector where FPIs emerged as net buyers. FIIs have been adding telecom sector for the past 1 month. In the second half of May, they infused 2,127 crores, whereas in first half of June, it added a moderate 373 crores. While the total outflow for CY 2026 stays at 16,703 crores, they seem to have been diverting their funds in this sector. Previously, we have analyzed FPI activity in equity segment for March, April, and May month. For better clarity and understanding the sectoral rotation trend, I highly recommend watching those videos. The links are attached in the description below. For more data-driven educational content like this, please like, share, and subscribe to Market Insights by Prakash. I am Prakash Choudhary, a NISM-certified research analyst. Thank you.